To the financial space, we have Rahul Jain, co-head of Asia Financials and head of India Research at Global Investment Research at Goldman Sachs with us now to talk about his view on the overall sector. Rahul, great to have you with us on the show. We've gone through this last week and a half of a lot of up and down in terms of what's going to happen with policy. Will it be more consumer focused now? And I think the market settled down to the view that there'll be policy continuity and therefore the capex focus should continue. But the funny part is, while PSU stocks keep shooting through the roof, while capital goods stocks are trading at 80, 90 times, the money is not flowing into banks, which is supposed to be funding. I'm assuming if you're looking at fantastic economic and capex growth, then it's the banks that are supposed to be funding it. And yet we're not seeing that kind of investor love towards the banking and financial space. Your thoughts on this?
Sure. Good morning, Surbi, and good to be on your show. Look, before I straight away drill into the question that you asked, let me just paint the overarching view that you've got in the sector. So a couple of months back, we actually downgraded the earnings in the sector basis three key reasons. Number one was the cost of funds likely to remain elevated, and we've seen deposit rates going up by select banks over the last couple of months. Number two, the consumer leverage, which has been increasing, that's been raising the fears on potential NPLs coming through in the unsecured credit space. And of course, the third aspect was around the operating expenses, which so far along banks have managed it well. But given the fact that deposit mobilization is the key, banks will need to keep upping their investments in their resources and the branch infrastructure. So clearly, there would be some earnings, facing the headwinds, at least in the near term. And in that aspect, clearly the investors are taking the view that where do they get good visibility in the near term. To answer your question, the reason why the private banks may have underperformed in the last few months or maybe last few quarters is because of both the technical reasons as well as the fundamental reasons. Technical reasons are well known. The flavor of the season has been the PSUs across the board. We have seen the PSU banks show good performance over the last many years. The other technical factors was the foreign flows into the country has been rather subdued compared to the domestic flows, and the flavor of the money in domestics has been more on the small and mid caps of the PSUs. On the fundamental side, like I just painted the picture, the visibility on the earnings growth has been a bit more hazy, at least in the near term, and that could be the reason why investors have chosen to look at other sectors compared to the financials.
Just to clarify, despite the headwinds that you mentioned, and that's the whole fight for deposits, increasing consumer leverage, which may lead to some more NPLs and rising operating expenses, despite those headwinds that you described, Rahul, you still have buys on a lot of the large blue chip private names, right? Axis Bank, HDFC Bank. You also like IndusInd. I believe you like Kotak as well. So just explain that. Are these sort of more insulated from the headwinds you just mentioned?
So without getting into the stock specifics, I would say that some of the private banks clearly would be better positioned because their incremental market share gains in deposits have been better, or their management of the operating profitability has been better, either through better margins or better fee income, which has been helping them absorb the operating cost. Some of these banks also have been at the forefront of investing in, opening new branches, putting more resources at the ground level, which is helping them gain more deposits. So when one looks at over the next 12 to 18 months, we believe that the market share and deposit will play an important role because that also will allow you to get more customers and therefore get more operating leverage out of that. So really speaking, it's a call one is taking on the operating profit growth where one would have a more visibility. And compared to that, where the valuations would be. We've seen the valuations also get derated for select private banks quite steeply. And when you compare to the fundamentals, you do see a good opportunity for investors to buy into these names.
All right. Hi, Rahul.
Guys, sorry, just an anecdote. Only yesterday I was talking to somebody, an investor, and he said, well, people ask me what to buy. He says, I tell them SBI. SBI will double in 2 years, whatever. Is where people don't want it. Something more masala, exciting, chota, small cap, mid cap. SBI as an idea. But that's true, right? When you think about what is an idea, sometimes the best idea could be
the most boring one.
Yeah, the most boring one. But I found it interesting that people just don't believe. They just take it because it's why do we need you to give us SBI as an idea, even if they don't own it, I guess, right?
All right, let's get Rahul's view. Rahul, hi, good morning. Welcome to the show. Nigel on this side. Talk about SBI. What's your view on some of these other PSU names? That's clearly been the space that has done very, very well. All those concerns have been, put aside, and the PSU banking names have done very well. At current prices, bulk of the good news is in the price?
Hi, Nigel. So again, going back to the overarching view that I painted, right? If you look at the PSUs, they've done a good job in the last 3 to 4 years. We've seen the ROAs improve like almost 4x from 0.2, 0.3% to now about closer to 1% or thereabouts. And the market has rightfully rewarded those. The valuations have improved. But now what we are observing is the valuation gap between the private and the PSUs have narrowed a lot. And when when you're talking about the normalized macro environment over the next couple of years, it again comes back to which entity, which segment will be able to better protect the profitability both at the margins front as well as at the operating profitability front, while gaining the market share in deposits or credit. And there we are seeing that private banks have done a good job. At least in the last year, there was a lot of focus on whether PSUs will be able to retain the market share in deposits. Or they'll gain market share because they now all come back into the game with good capital ratios, with healthy balance sheets. But what we are seeing is the private banks still continue to gain market share out there. So in our opinion, we feel that there is more value in owning the private banks at this stage than the PSUs. And that's been our call, for the last couple of months.
Rahul, I wish we had more time, Prashant here, but we'll pick up on some of these points that you made in a later conversation. Thank you very much for joining us. Great to speak with you here on CNBC TV 18. So that's Rahul Jain. He's co-head of Asia Financials and head of India Research, Global Investment Research at Goldman Sachs.